Hi friends, welcome to RecTV. Today we are going to discuss about Accounting Standard 26. This is the topic of Group 2 Advanced Accounting. Before going to discuss about Accounting Standard 26, already we have seen in Group 1 Accounting Standard 6 and Accounting Standard 10. In that there is no definition for asset, but in Accounting Standard 26 there is a definition for asset. Let us look at it. An asset is defined as a resource. It means it is a resource controlled by the enterprise from which future economic benefits are expected to flow. And an intangible asset is a identifiable non-monetary asset without physical substance, may held for use in production of goods, rendering services, rental to others, and for administration purpose. So this is the definition for asset and intangible assets. Now let us see here. Intangible assets said as identifiable non-monetary. Then what is the meaning of monetary and non-monetary? It means monetary items are monies held and items of assets and liabilities receivable / payable in fixed determined amount of money. So when we call it is a monetary items means it is receivable or payable in a fixed determined amount of money. Examples we can consider like debtors. Always our debtors pays us a determined amount, not less than that or not more than that. And the provision and discount, that all other cases, but we know what are the money are going to flow in future. Likewise creditors, debentures, etc. So these are the monetary items. Here creditors also, when we are purchasing goods from our creditors, so we are debtors to them and we are going to pay whatever the amount we are purchased from the suppliers, that is creditors. So this is the meaning of monetary. Then what is the meaning of non-monetary? Means which are not receivable and payable in a predetermined or fixed amount. So here in intangible asset, the meaning it says that identifiable non-monetary asset without any physical substance, may held for use in production of goods, rendering services, rental to others, or for administration purpose. So some of the examples for intangible assets are, those are computer software, patents, copyrights, and technical know-how. These are the some of the examples for intangible assets. Even though intangible assets does not have physical substance, it is usually stored in some physical containers. For example, software stored in CDs, license in legal documents, website and server cost, etc. And the cost of container is usually immaterial and therefore included in the cost of intangible assets. For example, you are going to purchase software and it is stored in CD. So here software cost is 11,950 and the CD cost is 50 rupees. So when you are determining intangible asset value in the balance sheet, you should show it as a 12,000 including the CD cost. So that's why we say that cost of container is usually immaterial but therefore included in the cost of intangible assets. If the cost of physical substance and intangible element can be separately identified and as material, then the intangible element and tangible element shall be capitalized separately. For example, now you are going to purchase a laptop and it is already installed that software, that is Windows 10. So now in your balance sheet you have to show laptop cost 40,000 and the software for 20,000. So but many of companies shows that at 60,000 including laptop and software. This is wrong accounting treatment. You should show laptop separately and the software that is Windows 10 you should show separately. So total 60,000 you should separate in the balance sheet, 40,000 and 20,000. Next, conditions for the recognition of intangible assets. Intangible assets should be capitalized only when the following two conditions are satisfied. Here, two conditions should be satisfied for the recognition of intangible assets. Those are: it is probable that future economic benefit will be earned by the enterprise. So, whatever enterprise, it should be probable that future economic benefit will derive from that intangible asset. And here, what is the meaning of probable means? More than 50% it has a chance that future economic benefit will be derived from the intangible asset. And the second conditions where cost can be measured reliably. Because of this second condition, some of the intangible assets are not going to appear in the balance sheet. For example, goodwill. Here goodwill we cannot measurable at present. It means when your business is going to dissolve or you are selling to some other persons, at that time your goodwill will be, cost can be measurable reliably. It means because of this reason most of the intangible assets are not going to the balance sheet. For example, goodwill. Your business has a goodwill, but you cannot measure it now, because if you want to measure goodwill, there should be a dissolve or you should sell your company. At that time you will measure goodwill and you will receive money for that goodwill. Now, for example, most of the companies like Reliance, Tata, Audi, like this company, they had a lot of goodwill, but in their balance sheet there is no value for the goodwill in their balance sheet. This is because at present they cannot value what is the goodwill for their business. So this is the second condition. This is very important. So when you satisfy both the conditions, then you can recognize intangible asset in the balance sheet. Now, measurement of intangible asset. Intangible asset should be initially recognized at cost. Here cost includes purchase price plus non-refundable taxes plus registration cost minus trade discount. If intangible asset is obtained from government, then it should be recorded at the concessional rate at which it is obtained. If it is obtained for free of cost, it shall be recorded at nominal value. Next we are going to discuss about self-generated intangible assets. In this, it is divided into two. First one is self-generated assets like goodwill, brands, customer list and publishing titles. So these should not be capitalized in the balance sheet, because the reason is cost cannot be measured. So in recent we have explained that why the goodwill is not appearing in the balance sheet, like companies like Reliance, Tata, Audi and etc. What is the reason means? Here the reason is because we can't find cost now itself. And what is the customer list? Here how the customer list can be intangible asset. For example, now like degree colleges and intermediate colleges, after 10th some SARs or some students or some people comes and takes your phone number for their admission purpose in their own colleges. For this they have a list of your numbers, but they can't generate income at that time, and they don't know whether there will be income from those numbers. It means whether the people are going to join in that college or somewhere. Because of this reason, and there is a probable chance, it means 50% of chances is there to join students in their colleges. Because of this reason, we are going to tell that customer list is also an intangible asset, but we can't say cost, so it is should not be capitalized in the balance sheet. And when we go through second part, that is research and development. Here research and development again divided into two, that is research phase and development phase. In research phase, it is a process of original and planned investigation to obtain new findings. It means you are going through research to find a new finding. For this, there is a incurred cost in this process. So you should transfer it to the P&L account. You should not capitalize it. And when we come to the development phase, here development phase, expenditure incurred on successful research. So for example, take 5 years. In these 5 years, you are going 2 years for research, and after completing second year, it got that your research was successful and you are incurring development cost. So first 2 years it is research cost, and after second year to, that is third year to fourth year, it is you are incurred development cost. So here you can say that here research cost, whatever we are incurred in first 2 years, it should be transferred to P&L account, and development cost, whatever you have incurred from third year to fourth year, it is a development cost, so it should be capitalized. But there is a condition for it to capitalize in the balance sheet, that is capitalize if all the 6 conditions are met. So there is no 1 condition or 2 conditions, there are 6 conditions. It should be satisfied cumulatively, then you can capitalize development cost in the balance sheet. Now what are those conditions are? Let us look once again whole chart before you are going through conditions. So before going through 6 conditions, let us see whole chart once again. The expenditure incurred during research phase shall be transferred to P&L account. Since it is not possible to demonstrate future economic benefits at the time of incurring such expenditure, because of this reason you are going to book in the P&L account. And if the research proves it is successful at a later stage, the expenditure which is already charged to the P&L account should not be capitalized. So friends, now we have taken 5 years examples. In that first 2 years we have taken as a research cost, and it is transferred to the P&L account. And when we come third to fourth, it is development cost, so we have capitalized. After it is successful, that is your research is going to successful, and you should not bring whatever the amount you have transferred to the P&L account in first and second year, you should not bring to capitalize in the balance sheet. So whatever the amount we have transferred to the P&L account, it should be shown there only. And cost incurred during development phase can be capitalized only if the following all the 6 conditions are satisfied. Those are technically feasible of completing the intangible asset so that it is available for use or sale. So these are the following 6 conditions. And second condition is ability of enterprise to use or sell intangible asset. And the third condition is intention to complete the intangible asset. Fourth, availability of adequate technical and financial resource to complete the intangible asset. Fifth, it should be probable that the intangible assets will generate future economic benefit. And the last, that is 6, cost can be measured reliably. So friends, the first condition is technically feasible. It means while using one intangible asset, you are going to use technical feasibility in the production from good to, that is you are producing in the part of production of goods through intangible assets. So there will be a use of technical feasibility. And next is ability of enterprise to use or sale of intangible asset. So the next is, if first condition is satisfied, and the second condition is the enterprise should have ability to use or sell. It means after meeting first condition, the second condition is not going to meet by the enterprise, so it can't able to sell or use. So these because of these 6 conditions, 1 conditions have not met, so it is transferred to the P&L account. So once there is a technical feasibility, the enterprise should be able to use and sell. And the third condition is intention to complete the intangible asset. So now you are in the process like in the research and development, you are going to research, you are in the process, till now you have incurred cost, so you have transferred to the P&L account, and suddenly the management said that we don't need this process and dissolve here itself, and we are not have intention to complete this intangible asset. So here also, if the third condition also not met, so it is transferred to the P&L account. So the management should have intention to complete intangible asset, and you should have available technical and financial resources. So you are going to do research and the management is not supporting you for financially, so you should transfer to the P&L account to the whole cost. Because of these reasons, they may disappear in the balance sheet and you are transferring to the P&L account. Fifth condition, that is probability of intangible asset will generate economic benefit, as this we have seen in the first, and last condition is cost is measurable reliably. If these 6 conditions are cumulatively met, you can capitalize your development cost to the balance sheet. Now assets should be capitalized in the balance sheet all of the following: that cost incurred and present value of future economic benefits of an intangible asset. To understand this, let us consider one example. Here we have taken 7 years, and first year and second year is gone for research. So first year incurred 10 lakhs and second year incurred 5 lakhs. And second to fourth year there is a successful in the research and incurred development cost. It has incurred 30 lakhs. Next, fourth to fifth year and fifth to sixth year and sixth to seventh year, you have derived benefit from such development cost. So in fourth to fifth year you have got a benefit of 10 lakhs, and fifth to sixth you have got a benefit of 10 lakhs, and sixth to seventh also 10 lakhs. Now here there is a appearing that discount rate is 10%. Now you have to bring all the future economic benefits into present, like in FM we have did in first group like that. So fourth to fifth year we bring to the fourth year, and fifth to sixth year we bring to the third year ending, and sixth to seventh year also we have bringing to third year ending. So and this, while bringing this back to the present value, we got the rate that is 2.4868. So 10 lakhs into 2.4868 is equal to 24 lakhs 87,000. And when we are deducting this from 30 lakhs, we got 5 lakh 13,000. From this we can say that the research expenditure incurred in the year 1 and year 2 shall be written off to the P&L account, and rupees 30 lakhs incurred towards development can be capitalized subject to 6 conditions. So whatever the 6 conditions studied in the earlier, here you should satisfy those 6 conditions, then you can capitalize in the balance sheet. However, the amount capitalized should be that here the capitalized value should not exceed the present value of future economic benefit, and present value of future economic benefit is 10 lakhs into PV factor of cash flows, that is 10 lakhs into 2.4868, 24 lakh 87,000. Out of rupees 30 lakhs development cost, only 24.87 lakhs can be capitalized, and the remaining cost, that is 5.13 lakhs, shall be charged to the P&L account. So from this example we have understood what is the cost incurred and present value of future economic benefit in intangible assets. So this question is appeared in the CA final once upon a time. So there is a chances in appearing IPCC Group 1 exam. Now we are going through amortization of intangible assets. What is the meaning of amortization of intangible assets means? For example, now you are dealing with fixed assets. Now whatever you do, it means like you every year you will depreciate that fixed asset and you will transfer the depreciation amount to P&L account. So over a period of asset, it will be going through the P&L account. Likewise, here amortization of intangible assets also same, like amortization means like depreciation. So you are taking the amortization amount from intangible assets and throwing in P&L account. So like this, over a period of intangible asset, it will come to zero balance. Amortization of intangible asset. What is the meaning of amortization of intangible asset? Means when you are dealing with a fixed asset, every year you will depreciate that fixed asset and throw it in P&L account. So over a period of asset, every year depreciation amount goes through P&L account. Likewise, here amortization meaning also like depreciation. Amortization of intangible asset means every year from intangible asset, a part of amount, a sum of amount you are transferring to P&L account because of amortization. So amortization of intangible asset means whatever the period that intangible asset has, throughout that period you are taking a part or sum of the amount to P&L account. At last, that intangible asset will show zero balance in the balance sheet. Now amortization means it depends on the useful life of the intangible asset and also residual value. For example, now you are dealing with fixed asset in straight line method. Whatever you do, original cost of asset minus residual value divided by number of years. Likewise, here also you need useful life and the residual value for intangible assets. And AS 26 assumes that an intangible asset does not have the useful life exceeding 10 years. So as per AS 26, we assume that intangible asset does not have a more period, it does not exceed 10 years. The cost has to be amortized over a maximum period of 10 years. So you are assuming here only the period of intangible asset is 10 years. So the cost also you should amortize over a period of 10 years only. And if however you thought that is a 10 years for intangible asset, now however if the enterprise is able to prove that the life of intangible asset is greater than 10 years, then amortization may be made over such extended period. So we said that for intangible asset does not have useful life exceeding 10 years. If there is a 15 years or 20 years exceeding 10 years, at that time the management has to prove and also they should amortize over a period of 15 years or 20 years, whatever the management has proved. For example, let us take one telecom license from Government of India for a period of 20 years. So here it is exceeding 10 years and it got a 20 years period, so amortized to P&L account over a period of 20 years. Next, our software and website development cost should be amortized over a period of 3 to 5 years. So we have taken here intangible asset does not exceed 10 years and all the intangible assets has given period of 10 years, but only software and website development cost, that is software and development cost, has given only a period of 3 to 5 years. Why? Because it is related to technology and technology keeps on changes. So for that reason, for website software and website development has given only 3 to 5 years. And in second point we said that residual value should be considered. Then whatever the amount of residual value will appear, for example, it has to be assumed that the residual value of intangible asset is 0 unless there is a guarantee received from the third party. So if there is no guarantee, then you should take residual value 0. If someone party, that is a third party, given a guarantee for the intangible asset, therefore the residual entry should consider at that amount. This is the amortization of intangible asset. Now let us see manner of intangible asset, manner of amortization. In which way you will amortize the intangible asset to P&L account. Firstly, let us consider this example. In your balance sheet, there is an intangible asset for 30 lakhs. This is a telecom license. For that period is 5 years. Now, next you consider that here, this year 1, year 2, year 3. So, in these 5 years, you got a sales like 15 lakhs, 15 lakhs, 10 lakhs, 10 lakhs and 5 lakhs over a period of 5 years. Now, we will take it as a ratio. So, we got a ratio 3:3:2:2:1. Now, this ratio is known as future economic benefit ratio. It is because these 30 lakhs, that is whatever it is showing in the balance sheet, that is intangible asset 30 lakhs telecom license for 5 years. This license giving benefit of 5 years like sales, that is in the manner of sales. The first year 15 lakhs, second year 15 lakhs, third year 10 lakhs, fourth year 10 lakhs and fifth year 5 lakhs. So, this is the future economic benefit. So, in that ratio we will amortize this cost, that is a 30 lakhs cost to every year in this ratio to P&L account. So, friends, from this example we understood that our first preference is the cost of intangible asset should be amortized to P&L account in the ratio of expected future economic benefit. And our second preference, so our second preference goes to straight line method of for amortization, because if the estimated future economic benefit cannot be made, then follow straight line method for amortization. So, this is the manner of amortization intangible assets. Next we are going through disposal of intangible assets. Now, you are in the situation that your intangible asset should dispose. So, when intangible asset is sold, then the profit or loss arising on disposal shall be transferred to P&L account and the asset should be de-recognized. So, friends, now whatever the intangible assets you have, now you are going to sell. After sale, there is a profit or loss on such sale. So, you should transfer such profit or loss to P&L account, or in your balance sheet you should de-recognize of intangible asset. So, this is the disposal of intangible asset. Now, we have left with last head, that is disclosures. Let us see. Now, we are going through last head in Accounting Standard 26, that is disclosures. The financial statement should disclose the following, like what is the useful life of intangible asset and how many years it is going to use. This is our first disclosure. And the secondly, you should disclose in what manner the amortization is used, that is amortization method. So, in this we have discussed two methods, that is future economic benefit ratio and straight line method. When we use straight line method means when there is no possible to use future economic benefit ratio, at that time we will use SLA method. So, this is the two methods for amortization of intangible asset to P&L account. So, you should also disclose which method you are following for amortization for intangible asset to transfer to P&L account. And third head is, that is gross carrying amount and accumulated amortization. Here, gross carrying amount and accumulated amortization means whenever your balance sheet is carrying intangible assets at gross cost, so you will have a accumulated amortization amount. So, for this reason you have to show gross carrying amount in the financial statement as well as accumulated amortization. Whatever amount you are taking should also disclose in your financial statements. And fourth, that is aggregate amount of research and development recognized as expenses. So, here we have seen a lot of example for research and development cost. So, whatever the expense you are recognized to the P&L account and whatever the amount you are shown in the balance sheet as a cost, you should recognize and you should show in the financial statement as per AS 26. And fifth head, that is gains and losses in respect of retirement and disposal. So friends, when you are using your intangible asset over a period, after using this you will sell to some persons. In that you will earn a profit or loss. So this profit or loss in respect to retirement or disposal you should show or you should disclose in your financial statement. And the last, that is impairment of losses, if any, you should also recognize this also in your financial statement as per AS 26. With this we have completed our standard, that is AS 26, which is dealing with intangible asset. So we have finished AS 26. Now let us see whole whatever we have learned in AS 26. That is meaning of asset, that is what is the meaning of asset and what is the meaning of intangible asset. So let us see what is the meaning of intangible asset once again, because it is important. An intangible asset is an identifiable non-monetary asset without physical substance, may be held for use in production of goods, rendering services, rental to others, or for administration purpose. And we have also seen some examples like computer software, license, trademark, etc. And next we have learned that conditions for recognition of intangible asset. So we have two conditions, that is it is probable that the future economic benefit will be earned by the enterprise, and next is cost should be measured reliably. And also next we have seen measurement of intangible asset, and after that self generated intangible asset. In this only we have seen research and development. So this is the one of the important, so concentrate research and development cost for more. And in this also there is a 6 conditions to show cost in the balance sheet when your project is going to success. So when you see these 6 conditions properly for examination point of view. And lastly we have came to amortization of intangible asset and manner of amortization and disposal of intangible asset, and last disclosures. So these all we have learned in AS 26. Thank you friends. Let us see another standard in next video.